All right, good morning, everyone. Welcome to the latest in our series of webinars. Now, while we wait for everyone to get into the session, just a couple of things as we get started. So, if you look at the bottom of the screen, if you're joining us on Zoom, there is a Q&A button that brings up the little Q&A box on the side. Please feel free to type in questions as we go. If there are any that aren't answered as part of the webinar, we'll answer it in the relevant section, and I'll keep an eye on those as we go throughout. We'll give it another couple of minutes. The participant numbers are just increasing now, so we'll get people joining for the next little few couple of minutes. All right, we'll just give it one more minute, and just a reminder for those of you that are just joining, at the bottom there is a Q&A button. If you press that, it'll bring up the Q&A box. You can feel free to type in questions as we go, and then we'll answer those as we go through the presentation and the relevant part. Okay. Good. I can see some of you have already found that Q&A button, which is good. And thanks also to those of you, a few people sent in questions before the session. We've made sure to incorporate that into the presentation today. So hopefully it answers those as well. Okay, let's get started. So, so for those of you that joined the last one, I just want to clarify this first. There have been no real significant updates in the legislation since our last webinar at the start of the month. So you won't see anything new if you join the one at the start of the month. So, just so that you don't sit through the entire thing waiting for something new, but no, there's nothing new to announce there. So for those of you that are joining for the first time, welcome. Hopefully this will clarify a lot of questions that you've had, and and we can hopefully help you through your compliance steps as well. So with that said, and sorry, there's been a few more people joining. So just to repeat, sorry, one more time, there's a Q&A button down the bottom that brings up the Q&A box. Feel free to just put in your questions as we go, and we'll answer them as we go. All right, let's get started. I will share my screen. All right, sorry, just starting the slideshow. There we go. Okay, so everything that we're going to cover today, you can either take note of all of this yourself and do all of this yourself, or, and a quick plug before we get started, we're doing all of this for free. So, we are doing, if you just sign up, we do your free registration, 3 months of free accounting, you get our 0 penalty compliance guarantee as well. And all of it is free. There's no strings. If you after 3 months, if you decide that you want to spend the money and go hire an accountant or try and do it yourself, absolutely fine. Happy to have helped, but hopefully you'll stay on as a client with us beyond that free period. So by all means stick around and learn all about it. But if you don't want to learn about it, just jump on here, sign up, and we'll take care of the rest. Okay, let's get into it. So, one of the most common questions we've had through these webinars is obviously, does it relate to me? So who is actually taxable? So the general rule is that any company, right, has to register, has to do proper accounting, and has to file a tax return. So it applies to every single company. It doesn't matter whether you are in a free zone, doesn't matter whether, if you have zero, you don't even bring in 1 dirham of revenue. If you just have the company set up for visa purposes, for example, it still applies to you. You still have to go through those compliance steps. I think the best way of thinking of it is that for corporate tax, every company starts out, or the default position with the Federal Tax Authority is that every company is a taxpayer, and you need to prove if that's not the case. So even if you don't end up paying tax, you still have to register, you still have to show your accounts, and you still have to file a tax return to show that you're not paying tax. Now, there's a question here. If you're an individual freelancer, does corporate tax apply? So the one point of difference is where there is no separate legal entity, right? Then you only have to register if your revenue goes over 1 million dirhams. So that's freelancers, or if you have an e-trader license, or if you're a sole establishment, right? Which means that there is no company, right? It's just it's a business that you're operating as yourself. Then there's a slightly different set of rules for that. But every single other company, so basically if there is a company, if you have a registered company, it applies to you from the outset. Questions here about the way to register. Oh, look, just go on taxready.ae and put in your details and we'll do it for you for free. It's a very straightforward process for us. We've got it all built. Otherwise, you need to go through the FTA website and try and do it that way. But, no point in doing that when we're doing it for you for free. Okay. So the next question, one of the most common questions I get is not even when is my financial year, it's actually what is a financial year, okay? Which is not a criticism at all, because most companies in the UAE have never had to do any kind of financial reporting. Even those companies that do VAT, they don't even actually follow necessarily have to follow a financial year for that. So there are, a huge number of companies in the UAE that have never actually had to file accounts for a financial year. So the first thing to work out is what your financial year is. Now, there's an easy rule of thumb for this. So if you are in a free zone or in a mainland, pretty much every single company, your financial year will run from January to December, okay? The only exception to this is if you are registered in Dubai World Trade Center in DWT, so that's DWTC. If you are a DWTC company, it works a little bit differently. It goes off the time that you opened your company. But for every other company, or every other free zone and the mainland, your financial year runs to calendar year, so January to December. What that means is that your business, or most companies, will be taxable from the 1st of January 2024. Okay, the reason for that is even though tax came in on the 1st of June 2023, it only comes into effect for the financial year which starts after that date. So if you have a financial year that runs January to December, the financial year that starts after the 1st of June 2023 is the one that starts on the 1st of January 2024, okay? So right now, for all of those companies with a January-December financial year, which should be pretty much all of you, you become taxable on the 1st of January 2024, and so that is when all of these compliance steps need to come into play. One exception to this is if you have only just opened your company, or if you opened your company after the 1st of June 2023, you are actually taxable straight away because you have a short financial year to start, and that financial year is, you obviously opened your company into a live tax environment, so you become, you're taxable from the outset. A question here from Molly. So does that mean a company's profits before Jan 2024 will be exempt from tax? Yes, as long as your company was open prior to the 1st of June 2023 and you are not a DWTC company, then that's correct. Your profits before Jan 2024 should be, excluded from corporate tax. I wouldn't even say they're exempt. It's just that corporate tax doesn't even apply until the 1st of January 2024 for you. Okay. So that's around the timing. So a lot of the compliance steps that we're going to talk through in this presentation, the majority of you, this all kicks in, in about 6 weeks. All right, we're going to go through sort of the three, I think of it as the three exemptions or the three reliefs that are available to a company, or especially to a free zone company, before a company is paying any tax. And we'll go through all of these in detail. This is just the overview. So we'll go through what it means to be a qualifying free zone person, also called the free zone exemption. We'll go through, the small business relief rule, and then what happens if you don't qualify for either of those is the tax-free threshold before you actually pay any tax. So those are the three main points we'll go through, or three pieces of legislation we'll go through. And basically, you're only a tax-paying business if you fall through all of those three pieces of relief, which hopefully won't be many of you in the, in the SME sector. Okay. Sorry, just a question here. What was the requirement for a DWTC company? So what you need to do if you are a DWTC company, you need to check your memorandum. So check your MOA, and it's on about page 5. There's a section called fiscal period, and that will tell you what your financial year is. So what that means is if you are a DWTC company normally, and let's say you opened in August, right? That means your financial year will run August to July every year. And so, you would be taxable already because you'd had a financial year that just started in August. So just check your memorandum and apply the same rules. So it's the financial year which starts after the 1st of June 2023. And just to reiterate, that is only for DWTC companies. Every other company, it should be the 1st of January unless you opened after the 1st of June 2023. Okay. First thing we need to talk about is the compliance steps, which I've referred to. So every single company, right, has to register. Every single company has to keep proper accounting records, and then every company will need to file a tax return as well. Basically, it doesn't matter if you don't need to pay tax, or if you're under thresholds, or if you don't have any revenue at all. You still need to go through these 3 steps because you need to be able to prove it to the FTA. Okay, so like I mentioned before, the FTA assumes that every company is a taxpayer. Is a taxpayer. You need to prove if that's not the case. Now, the registration process is the same for all companies, or roughly the same. The accounting requirements are slightly different depending on the size, which we'll go through. But it's where you file the tax return is where you declare whether you are going for an exemption, or whether you are filing for small business relief, or whether you are under the threshold. So it's only at that last stage, when you have the materials to do it, is when you file the tax return, is when you can show that. So think of it this way. If you are filing for, if you're filing to say that you are under the tax-free threshold, right? You need to support that with proper accounting to actually show the FTA that you are under that threshold. Okay, you can't just sit back and go, oh, I'm under the threshold, and I'll see if the FTA comes knocking to find out. It doesn't work that way. You actually need to declare it. So you need to sort of opt in and declare. Otherwise, the first step will be that you'll get fined for not submitting. You'll get fined for not registering, and you get the big fine, the big 20,000 dirham fine for not keeping proper accounting records. There is one difference between these three criteria, which is if you are going for the qualifying free zone exemption, you'll also need to do an audit. Okay. The only other group that needs to do audits is if your revenue is more than 50 million dirhams, right? In that situation, you need to do an audit for your tax return as well. But if you are going for small business relief, or if your revenue is less than 50 million dirhams, you don't need to do an audit. You just need to make sure that your accounting is done up to the correct standard. Okay. I mentioned accounting up to the correct standard. So just recently, a couple of weeks ago, last month, sorry, the Federal Tax Authority and the Ministry confirmed which accounting standards are applicable for tax. So the general rule is that accounting needs to be done to IFRS, so International Financial Reporting Standards. If you are a smaller company, you can use a subset of that or a slightly easier version of that, which is called IFRS for SMEs. And if you're smaller still, you can use what's called cash basis accounting. Now, it doesn't matter which of those standards you go for, and I'm assuming most of the people on the call are are involved in SMEs. So even if you are small enough to use cash basis accounting, you still have to produce a correct profit and loss statement and balance sheet. You need to produce proper financial statements to support your tax position. So you can only access those relief rules or those exemptions if it is supported by, correct accounting. The ministry also confirmed what the penalty is for not keeping correct accounts. Right, so straight away, if they find that you haven't been keeping the correct financial records, you get the 10,000 dirham fine straight off, and then 20,000 dirhams if you don't remedy it. So it's quite significant, and it's a real kick, from the ministry to make sure that everyone is starting to keep proper accounting records. Just like we do everywhere else in the world, accounting is just a thing that has to be done. Tax is a thing that has to be done. There's no difference here in the UAE, aside from the fact that many businesses won't actually have to pay tax off the back of it. Okay, so we'll just do a high level over those three. Sorry, just jump back. I'll do a high level over these three groups first, and then we'll dive into the free zone rules because those are quite complex, and they'll take up quite a good chunk of time. So we'll just do an overview of these three. So if you are a free zone business, there are basically three exemptions that you want to look at before you actually end up paying tax. Now, the most preferable of these is getting the free zone exemption, what's called the qualifying free zone person. The reason that this one is preferable to the small business relief, for example, is that there is no end date for the qualifying free zone exemption. The small business relief, that rule ends by 2027, okay? But the qualifying free zone exemption, there's currently no end date on it. And the reason you want to opt for this, if it's available, is that if you don't qualify for this, or if you don't opt for this and think that, you want to go for the small business relief instead, you can't actually go back into the free zone exemption for another 5 years. Sorry, for an additional 4 years. So you have to sit out for 5 years before you can come back in. So what we're telling all of our clients is that if the free zone exemption is available to you, you should you need to go for it straight away. Rather than taking the slightly easier route of the small business relief, because it will save you some tax down the track. Having said that, the free zone exemption is quite complex and it's quite narrow in terms of the businesses that this is available to. So a little bit of history on this. There was an early indication that a free zone company which only did business outside the UAE was going to be exempt from corporate tax. Now, that is unfortunately not the case. In fact, a company in the free zone that only generates revenue from outside the UAE will most likely, not be exempt at all. Oops. unless they are doing a qualifying activity, which we'll get to. But but just to make sure there's no confusion, if you are a free zone business and you are only generating revenue outside the UAE, you are not automatically exempt from corporate tax. You have to meet one of the other criteria. Okay, so with that said, qualifying free zone person, so to qualify, you first need to make sure that 95% of your revenue is qualifying income. We'll go into the details of what that is. You also need to show that you have adequate substance in the free zone, not just in the UAE, but it's actually substance in the free zone itself. As we mentioned before, the free zone exemption will go beyond 2026, unlike small business relief. And but if it doesn't apply to you, and if you don't qualify for it, you can still go for something like small business relief. So it's not like, and this is another myth that has been going around when we move on to small business relief. One of the myths going around about small business relief is that it's not available for free zone companies. That's not the case at all. It is absolutely available for free zone companies. What caused that confusion is that the law said that if you are a qualifying free zone company, so if you get the free zone tax exemption, you can't also go for the small business relief, which is a bit of a moot point because it's not like anyone's going to go for both. So to clarify, small business relief is available to free zone companies and mainland companies as well, obviously. So the reason you would go for small business relief is if the free zone exemption is not available to you, then you can look at this rule. Now, this rule says that if your revenue is less than 3 million dirhams, that's annual revenue, so your sales, your top line turnover is less than 3 million dirhams, you don't have to pay any tax. Now, you absolutely still have to go through all the compliance steps again. So you got to register, you got to keep proper accounting to show that your revenue is under 3 million. And then you'll need to file a tax return to show, to declare that your revenue is under 3 million, but you won't need to pay any tax. Now, one limitation of this rule is that it's only available until the end of 2026. So if you have a January to December financial year and your annual revenue is under 3 million, that means you won't be paying tax in 2024, you won't be paying tax in 2025, and you won't be paying tax in 2026. 2027, you will become a taxable business. Okay, question here, what was the timeline mentioned if we do not opt for the qualifying free zone exemption? So if you don't qualify for the free zone exemption or you opt out of it, you can't go back into that exemption for a further 4 years. So you sit out for 5 years. So the year that you opted out of, and then 4 more years before you can jump back, before you can opt in again. Basically, they've got that rule so that people weren't, switching in and out of small business relief back over to the qualifying free zone exemption, as they sort of back and forth as they wanted to, which would have been a bit of a nightmare. Okay, so small business relief, I was mentioning you have to do all those compliance steps, but just to repeat, you won't require an audit for that. You just need to make sure that your accounting is done up to the correct accounting standard, which we outlined earlier. Okay, so let's say you are a business that didn't qualify for the free zone exemption. Your revenue was over 3 million. Let's say you had 4 million dirhams of revenue. That means that you don't have the free zone exemption available to you. You don't qualify for small business relief. Therefore, you are a taxable business. Okay, so let's take the scenario that we just outlined. So free zone business but didn't get the exemption, or a mainland business, so free zone exemption not available to you. Your revenue is let's say 4 million dirhams, so you didn't get small business relief. And let's say your profit is 1 million dirhams, okay? The first 375,000 dirhams of that profit is tax-free, so 0% tax. So what that means is if you have 1 million dirhams of profit, 375 is tax-free, so you'll be paying 9% on the 625,000, which gets you up to the million. Okay, so first 375 is tax-free, and then the next 625,000, if you've got $1 million dirhams profit, is taxed at 9%. Again, you only end up paying this tax if you fall through the other exemptions that are available. Okay, so you don't qualify for small business, and your revenue is more. Sorry, you don't qualify for the free zone exemption, and your revenue is more than 3 million, so you don't get the small business relief. Now, this raises a couple of questions around, okay, well, if I am in that scenario, so I've got my revenues more than 3 million, how do I reduce my taxable profit, within the rules? Okay, and it's the same sort of questions, it's the same games that we play all over the rest of the world. I spent a lot of time in Australia. It's kind of a national sport there, to try and reduce your taxable profits. So the most common one, or the most unique one that we have in the UAE, is around owners paying themselves a salary. Okay, so obviously, and there's a question here from Michael as well around this. Obviously, there is 0% personal, there is no personal income tax in the UAE. And so we are incentivized to pay out as much money as we can to the owner as a salary, which is taxed at 0%, rather than leave that in as profits in the business, which would then be taxed, after which a dividend would be paid. So just to sort of highlight that, a dividend is paid after tax is paid, whereas a salary is pre-tax. So a salary is tax deductible, a dividend is after tax. So there are no specific rules around owner salaries as yet. Hopefully the ministry will come out and directly address this, because it's a very common issue in the UAE. But what the rules say right now, or the rules that we can apply right now, is that any transaction, including salaries, with a connected person must be at arm's length or market value, right? So what that essentially means is that if you're an owner, right, if you're the shareholder of the company or a director, the money or the salary that you pay yourself must be similar to what you would earn in that same role for an unrelated business, right? So if you went out in the open market and got that same job for another company, which you didn't own, what would the salary be for that role? Okay. Now, that is very broad. That's, there's a lot of gray area. We've been doing benchmarking exercises for some clients, who want to be completely across that. So when I say benchmarking, if you are let's take one of the most common clients that I have. Let's say you are a management consultant. You just have, your own company here in the UAE. It's just you. You basically have one or two clients outside the UAE, but it's very, very, very successful. You've got 4 million dirhams of profit. Sorry, 4 million dirhams of revenue, which is essentially all profit, because it's just you providing management consulting services. All right. You are not going to get the free zone exemption, because management consulting is not an activity, which we'll go through. You don't get the small business relief because your revenue is too high. Right. So you are then looking at, okay, well, how do I minimize my taxable profit within the rules? All right. And so what we then need to do is we look at, okay, well, what would a partner or, a managing partner in a large consulting firm be earning out of that consulting firm? So if you were to quit your own business and go and be a top partner in a consulting firm, what kind of income would you be earning there? What kind of, salary or earnings would you be earning there? And that is sort of where we would draw a benchmark around. There's a question here, is it just salary and or bonus? So the way they will look at it is it's total remuneration. Okay, so salary, bonus, but also if you are putting some personal expenses through the business. So let's say you get the business to pay for the rent on your, on the villa on the house that you live in. That's not related to the business. So that would be treated the same as if the company had given you the money and you'd gone and paid the rent, personally. So any kind of remuneration out of the business will be bundled into one, and that's what will be used for the benchmark. Okay. There are some other, just quickly, some other deductible expenses. So entertainment and travel, well, client entertainment especially, you can only deduct 50% of that. So that's very similar to rules we have around the rest of the world. So, if you go out and you take clients out to dinner, for example, you put that expense through the business. You put that expense through the business. You can only deduct 50% of that. Okay, so let's jump in. Oh, and sorry, just to highlight again before we move past this, if you are under the 3 million revenue threshold, for example, you don't need to worry about these expenses, right? Because you will be filing under the small business relief, and at that point, they are only looking at your revenue. So if your revenue is under 3 million, you don't have to have all of this stuff in place immediately in terms of owner salary and everything, because you're effectively exempt from paying tax. So they're not going to be looking at your profit or what's calculated as your profit. All right. So if you're under 3 million, you just need to make sure that your accounting is correct at the revenue level. Obviously, you need to be doing your full profit and loss, but you don't really need to be at this stage, maximizing the tax efficiency through that. But what you do need to do is by 2027, right, when the small business relief ends, by then you need to make sure that you have everything in place. I'd still say the sooner the better, but it's not like you're going to get penalized. It's not like you need to start, really focusing on those deductible expenses from the 1st of January 2024. You need to have the accounting done correctly, but you don't need to try and maximize your expenses if your revenue is less than 3 million. All right. Question here. Oh, sorry, I'll just jump back 1 second. Can you put your car under your business for tax deduction? No. So they haven't spelt this out directly, but what we have in the rest of the world is, if you have a car that's under the business name, or the business is paying for a car, you'll need to show what proportion of use was for the business for that car, and it needs to be directly related to generating the profit. So, if you are a real estate agent, for example, and you are using your car to travel around to, transport signage to open homes and all that kind of stuff, then, you can probably deduct that, but you won't be able to deduct the portion of your use for your car when you're using it on the weekends to, to drive around in a personal capacity. Question here around less than 1 million revenue. So we just at the start I mentioned just talking about the compliance steps. Sorry, just answering some questions before we go into the free zone rules. If you are a freelancer, right, or you just have an e-trader license, but mainly freelancers, you only have to register for tax if your revenue hits 1 million dirhams. Okay, but that only applies to freelancers and where there is no separate company or anything. Okay. Sorry, I'm just having a quick scan through all the other questions. Brian Sikandi, yeah, just reach out to us after this around the Uganda piece. It's quite specific, and we can walk through that. Yes, we'll make the recording available after this. Question here, we've registered for corporate tax. Our revenue does not meet threshold. How do we apply for the exemption? So just to repeat, so you need to register for corporate tax. You need to do your accounting up to IFRS standards. And then when you file a tax return, that is when you apply for the exemption. Okay, let's jump into the more complex part of this. So let's go through the free zone rules. So basically there are two criteria of looking at what's called qualifying income. So the first thing you need to look at, or one of the two pieces that you can look at if you are a free zone company is, I refer to it as sort of the geography test. Okay, so whereabouts are your clients located? Now, if your clients are all located in companies located in UAE free zones, right, then it is likely that you will meet the qualifying free zone income test. Okay, so the rule specifically is 95% of your revenue needs to come from other free zone companies. So any companies within the UAE free zone bubble, right, if your revenue is generated from those, then it's likely that you'll qualify. If your revenue is all coming from outside the UAE or from the mainland UAE, right, if more than 5% of that is coming from outside the UAE and more than mainland UAE, it's unlikely that you will qualify. However, the second criteria looks at activities. Okay, so you can either get your, so just to confirm, so you can either get your revenue from other companies in the free zone bubble, right? Or your revenue, if it's from outside the free zone bubble, can still qualify if it is what's called a qualifying activity. Now, we've found that, well, you know, in all of the companies that I've spoken to, none of these really apply, or not many of these apply to SMEs, right? And you'll see it's very much heavy industry based. You know, I have a few clients who do manufacturing in a free zone, so they will qualify, manufacturing or processing, sorry. But obviously, you know, things like ownership of ships, reinsurance services, fund management services, financing of aircraft, you know, a lot of this is very sort of heavy industry, high value activities, not too common for small and medium, you know, small and micro businesses to be involved in these. Okay. However, there is one very, very relevant activity that has just been confirmed, all right, but that I've found, you know, I have many clients who this relates to. Okay, so what this rule says, this is around the distribution of goods and materials from a designated zone. What this rule is around dropship models. Okay, so, well, we're referred to as dropship. So if you have a business here in the UAE, right, and let's say you buy goods from China and ship them to Turkey, right? So you buy them from country A, ship them to country B, you know, to a purchaser in country B, and they never touch the UAE, all right? That activity will be exempt if you are set up in a designated zone. So designated zones are slightly different, or are different to free zones, what they're called designated free zones. So designated free zones are normally, you know, ports or the airport, but a lot of free zones actually now have designated areas or designated zone areas in them. So Raquez, for example, has a designated zone within there with offices. DAFZA, you know, Dubai Airport Free Zone, has a designated area, well, obviously, with offices there, right? So if you operate a dropship model, so again, that's, you know, you buy goods from country A and ship them to a distributor in country B, it doesn't enter the UAE, then, you know, you'll be exempt if you're in a designated zone. So we are expecting a large demand for, you know, a movement of businesses into designated zones because of this. Obviously, that needs to be seen in the context of how big your tax bill is to make sure it makes sense. But really, you know, this is kind of the only qualifying activity that we've seen in the free zone, you know, in those free zone rules, that seems to be quite applicable to a number of SMEs. Maidan is not a designated zone, Michael. Yeah, it's a bit strange. So I'll just give a bit more information about designated zones because there's some questions coming through around them. So designated zone generally, it's like a customs bonded zone. So if you've ever been down to Jebel Ali, for example, you know, the entire port is basically fenced off. You need permits to go in and out. Designated zone, they mean it originally from a VAT perspective. So goods are not deemed to have entered the UAE until they come out of the designated zone into the UAE, until they leave the designated zone. Effectively, it's like a customs offshore area. Actually, offshore is probably the wrong word, but it's a bonded area, and it's deemed not to have been, come into the UAE. The goods have not come into the UAE until they've left the designated zone. Okay. So if you do operate this dropship model, come and have a chat to us separately, because we're absolutely setting up sort of products to make sure that people are tax efficient if they are operating this model. Okay. Logistics services is another piece that may be relevant to SMEs. So we recently got a much wider definition of this from the ministry. So if you are a company that's doing transport agency services, seems to be the most relevant one, but also customs brokerage, cargo brokerage, freight forwarding. We do have a few SMEs that do these activities. Then you may be eligible for this exemption as well. Okay. Manufacturing is pretty straightforward. If you're manufacturing stuff in a free zone, then it's likely that you'll be exempt. Basically says what it does on the tin. Does what it says on the tin, sorry. Okay. So I'll just run through some more questions before we finish up. I have a mainland business, but my business caters outside the UAE market. Do I pay tax? Yes. So you're not automatically exempt. You still have to register. You still have to do proper accounting, IFRS accounting, and you'll need to file a tax return. You might not have to pay tax, but you need to do those 3 steps. And if you are, so there's a question here around VAT. So let's touch on VAT very quickly, because there's another misconception around VAT. So if you only sell outside the UAE, you don't have to pay VAT, but when your revenue hits 375,000 dirhams, you have to apply for what's called a VAT exception, right? If you don't do that within 30 days of reaching 375,000 dirhams, you get a 10,000 dirham fine for late registration or late declaration. It's a very common misconception that if you only sell, if you only have revenue outside the UAE, that you don't have to do anything for VAT. Unfortunately, it's not the case. Not the case for VAT, nor is it the case for corporate tax. But in the case of VAT, if you're only selling outside the UAE, you still have to register when you hit 375,000 dirhams. What you get is what's called an exception. It means you don't have to file tax returns, but you have to go through the process of declaring to the FTA that your revenue has hit that threshold, but you don't have to pay VAT. And obviously, if you do have any clients inside the UAE, you have to declare, you have to register once your revenue hits 375, and then you'll be paying VAT from then on. Okay, the question here from Daniela. Look, private jet chartering services, we believe, will fall under logistics, as transport agency. So you'd still need to, but this is just going on the surface. Obviously, it's going to be specific to each company, and we need to look at the number of criteria. But we are hoping that private jet chartering will be an exempt service under logistics services. Now, we do have a few clients like this that we've been walking through this. It won't matter where the client is flying. If you are providing the service from the UAE, as a booking agent, then you are providing, you are obviously a taxable business here in the UAE. And so, you'll still need to go through the motions, still need to register, still need to do your accounting, still need to file a tax return, but hopefully you'll be filing your tax return under the free zone exemption. Okay. So just a reminder before we jump ahead. So, all of these criteria, so regardless of what you're doing, and I know I'm sounding like a broken record here, you need to register, you need to do accounting up to IFRS or to the adequate standard, and you'll need to file a tax return. So I'll keep going through some questions, but just before I do, just a reminder, you can worry about all of this yourself, or you can just jump on here, do the free service, and we'll take care of it all for you. So you don't have any excuse if you get fined, because we're offering to do it for free. So, no excuses if you receive a fine, because the options here are available to you. All right, we'll jump through some more questions before we finish. Free zone company leasing cargo containers. So you'll probably be under the free zone exemption, but you need to be able to, you obviously need to prove that. So you need to register, file your, do your proper accounting. You'll need to do an audit. So the auditors will verify that you're doing that activity, and then you'll be filing a tax return. Sorry, I'm just jumping through some more questions. Free zone company with a management consultancy required to register for both VAT and corporate. So free zone management consultancy, yes, you absolutely have to register for corporate tax regardless of your activity, your revenue. You need to go through all of those compliance steps regardless of whether you're under the threshold. For VAT, you only register when you hit the threshold. So very key difference between VAT and corporate tax, all right? VAT only applies basically when you meet certain thresholds and criteria, all right? Corporate tax is complete opposite. So corporate tax applies to everyone. You have to be, basically you have to be registered, you have to do everything, and the onus is on you to prove that you don't have to pay tax. Okay, so completely different approaches for VAT and corporate tax. Corporate tax is mandatory for every company. If the accounting company makes mistakes with the accounting records, who gets fined? So it's a good question. Look, if you can show that it was not deliberate, right, and it's a bit of a tricky one, right, because normally it would go to a conversation with the FTA, because if it's an honest mistake, sometimes they will waive the fine or decrease the fine. Daniela, do we take our startup costs out now before 2024 to avoid paying tax? Not quite sure what you mean there, but if you have startup costs for your company, the best approach is to amortize that over, for example, the time of the license or the life. You can spread that cost out so that it's deductible in future years. How do we register for corporate tax? Just go to taxready.ae and we'll do it for you for free. We will share the recording. Someone's asked if we spare a few words on Virtuzone. Thank you. So Virtuzone, so we're a company, we've been here for 15 years. Originally, Virtuzone specializes in company formation. So something like 60,000 companies have been started by Virtuzone. And then I joined, over a year ago to basically build a, this accounting and tax firm within that, specializing in SMEs. So I myself am ex-KPMG, ex-Deloitte, and our staff, we've got, I think, getting close to 100 accountants now, and so we're all get up. They're all tax experts, so we're all get up to take really focus on that SME sector of the market. Okay, sorry, I'm still just getting some questions now. So. Just a reminder, small business relief. Okay, so small business relief, right? So if your revenue is under 3 million, you won't have to pay tax, but you still have to register. You still have to do your accounting because you need to be able to prove that your revenue is less than 3 million. And you'll need to file a tax return, which is basically you submitting that proof that your revenue is less than 3 million. Okay. And so that rule, it applies to any business where the revenue is less than 3 million dirhams per year. It runs for 2024, 2025, and 2026. All right. You absolutely have to go through the compliance steps to get that, to benefit from that rule. Otherwise, you'll end up paying tax. All right. And then only if your revenue is over 3 million will you actually be a taxable business. Okay. And so that's basically once you go over that 3 million. So if your revenue goes to 3.1 million dirhams, you become a taxable business, and then they start looking at your profit. Okay. And the profit is where you get the first 375,000 tax free. All right. So you've got to think of it as sort of layers that you need to fall through before you become before you actually pay any tax. So the first layer is the free zone exemption, right, which we know is quite narrow. So if you don't qualify for the free zone exemption, then the next layer that you look at is, okay, do I qualify for small business relief? So is my revenue less than 3 million? If not, then the next layer is, okay, well, what's my profit? Is my profit less than 375,000 dirhams? If it is, then you won't pay tax, but only if your profit, and only if you've fallen through those three layers, so your profit is more, and your profit is more than 375,000, will you be paying tax? Okay. So tax returns. So there are no provisional tax returns or provisional tax payments in the regime as yet. So in many other parts of the world, you have to make tax installments throughout the year based on your prior year. There's nothing like that in place here. So for tax returns, you file those. So for most companies, right, excluding DWTC, but for pretty much every company, so your first taxable year will be January to December 2024, and then you need to file your tax return in 2025. I mean, in theory, you don't have to. I think the deadline, you've got 9 months to do it, but please do not wait until September 2025 to do this. Especially if you think that you'll have an exemption available to you, because even if an accounting firm takes you on, agrees to do your accounting in September 2025, they're going to charge you through the nose for it. You're going to be running around trying to find old receipts and invoices and stuff. There's no benefit in waiting until 2025 to do this. If you wait until 2025 to do this, the best case is that you're just going to be trying to find, spending time digging up old invoices and stuff. Worst case is that, you can't find the information, you've left it too late, and you miss out on a exemption or a relief rule, and you end up paying tax that you didn't have to pay. So please, I mean, if you look at the screen right now, you've got no excuse. We're getting you all up and ready for free. So, so no excuses if you get fined. Okay, we're getting some very specific questions here. So Raina, Ali, yeah, those questions, you can just reach out to us separately or jump onto taxready.ae. You can also book a free consultation there with one of the accountants. It's just a 15-minute one just to cover these sort of specific but basic questions. Okay, look, I think a lot of the questions now are sort of more around timing. Again, please reach out directly on these, or just jump to Tax Ready, and you can book some free consultation as well through that to go through this. Okay, so we'll leave it there. Thank you again for everyone who joined. I really hope that was useful. Again, if you have more questions, especially I'm seeing a few questions around property. Those are all very specific to your, each company's individual circumstances. You'll need to, get some pretty specific advice on any property rental stuff, especially if it involves SPVs, free zone companies, commercial properties. So please reach out to us separately on that. So with that said, thanks again. Please, go to Tax Ready. It's genuinely free. There's no strings or commitments or anything. If you don't want to stay on with us, we're happy to to happy to have helped, and we'll see you on your way. But you know, we'd love to see you stay on as a customer. So thank you again. Hopefully talk again soon, and we'll be scheduling more webinars, you know, once we get more details from the ministry. All right, thank you very much.